Hey, what's up, my friends? So I'm back finally, right? After a long week break because of the birth of my baby daughter. So thank you all for your prayers and your wishes. I truly appreciate it, each and every one of you. And for those of you who are wondering, right, both mom and daughter, they are fine. And my life right now, over the past 1 week, has been mainly feeding her, cleaning up her poop, alright, trying to get her back to sleep. And that's basically sums up my life over the last 1 week. So now that I'm back, right, back to this week's market analysis, I want to share with you this one particular market that has fallen 50% over the last few years. And I'm getting interested in it because it's starting to show sign of accumulation, right? So the thing to note is that when something has fallen in price, right, of 50%, you need 100% to get back to break even. So there is definitely potential, right? Big potential trading opportunity to get back on towards the long side. So I want to share with you what market it is. And lastly, right, I want to talk a little bit about trading when there are two zones nearby. For example, you want to go short on a market and there are two areas of resistance that is on your chart. So you're wondering to yourself, which zone should you trade from? The nearer one or the further one? So I'll talk a little bit on it in this week's market analysis as well. So all this and more in this week's video. I'll see you there. Okie dokie. So the market that I'm referring to is actually none other than soybeans, right? Soybeans, you can see that in the high of 2014 over here, right? This is the high. It's about almost $18, $18 plus plus. And in a matter of a few years, it slumped all the way now to a low of around $9 over here. So it's a fall of almost 50%. And the thing about math is that when a product falls 50% or anything that falls 50% in price, you need 100% to get back to break even. So this is a fact, right? Soybeans now need to move 100%, a move of 100% just to get back to these highs over here. So some of you have asked me, Rainer, what platform you're using. And what you're seeing down here is the platform is MT4, right? So MT4, they don't offer futures. And futures is actually, soybean is actually being traded on the futures market. So if you want to see the soybean chart on the futures market, just go down to tradingview.com and you just key in soybeans and you can get an almost identical chart as the one you're looking over here. This is basically a CFD product of soybean. So it is, I would say, nearly almost correlated with the futures market, but I choose to go with this chart because it's so much easier and I'm very used to MT4. So, you click the daily, the 4-hour, and everything's very responsive. So I'm really used to this chart. But if you want to see the futures prices of soybean, go down to tradingview.com and they have it for you as well, right? Absolutely free of charge, and it really doesn't matter. It's a matter of your preference, right? Maybe I think for TradingView, it kind of looks more professional. Everything is more, laid out nicely compared to MT4, which has a more retail feel to it. But honestly, I don't really care too much whether I'm using a retail platform or a more professional platform. I think all that matters is whether you're making money as a trader, right? If you can use the best looking platform, right? The most, I would say, fantastic, sexy, technological advanced platform, but if you can't make money, what's the point, right? So I rather choose to go with a retail platform, something I'm comfortable with and I can make money. Who cares? All right, so that's it. Let's talk about soybean. So yeah, got a little carried away. So soybean, if you look at it right on a weekly perspective and I zoom out a little, you see that this $9 is actually quite a significant area, right? The last few times it tested around this area, it's a $9 something, and it rallied all the way back up to this highs over here, $18. And right now it seems to be at this level once again, but this time it broke below this area of support, right? And right now it's still consolidating near the lows. Nonetheless, it's still at an area of interest, at an area which is proven historically to be an area of value for soybean. So you have to understand one thing is that the futures market, like commodities, soft commodities like soybean, they are cyclical in nature. So they can be, trending very well for a few years, and after in a few years they are not trending well at all. So in this scenario, clearly at this point in time, soybean is a market that is not loved by the institution, not loved by the other players, because it's just basically going nowhere over the last 1-2 years. But that said, what has caught my interest is this, right? Looking at the daily time frame, what has caught my interest is that it seems to be in an accumulation phase. So what is an accumulation phase? So just a brief run through, right? Accumulation phase is when price has declined for more than 6 months or more, and after that it starts to consolidate. So after an accumulation phase has occurred, when it does breaks out is where we move into what I call the advancing phase, where price advances over time, then it starts to consolidate, then it collapses and goes back into a declining phase, blah, blah, blah. So right now, this is possibly in an accumulation phase. But I want to caution you one thing is that if you look back historically, at this point in the market, this was a potential accumulation phase as well. But then it broke lower and traded lower once again. So I want to caution you that even though a market may look like it's in an accumulation phase, nothing is guaranteed. So this is why I understand that I'll be trading against the dominant trend. What I like to trade in this kind of scenario is to trade the breakout where price has already indicated to me that it wants to trade higher. So what I'm looking for is that I noticed that this is a range, I think the range for over the last 1 year, right? This is the highs, this is the lows. And you see the 200-day moving average is starting to flatten out. So what I'm looking for is that for price to break and close above this high over here. If he can do it, right, it's signaling to me that the bulls are trying to regain back control, and this could potentially be the start of a new uptrend. There is absolutely no guarantee here, right? It is just something that I like to trade based on, long periods of consolidation, and then it breaks out. This is not really, I would say, a counter trend trade, because after all, I'm trading breakout in line with this recent strength, this recent momentum over here. What I wouldn't like to do instead is to go and buy near the lows over here. I wouldn't look to buy near the lows at support, because again, I'm trading against the current trend. But if I'm trading the breakout higher, that is different, because I now have the wind in my back based on this recent momentum that's coming up higher. So there's a difference over there, and it really boils down to your own personal preference and how you read the price action of the market. This is how I'm reading soybean at the moment, and as I've said, if it does close above this high over here, I'll look to get long on soybean and really see where the market can take us. And as usual, my stops is always 2 times the average true range. And yep, that's my plan for soybean. Definitely a market that I'm really excited about, and I hope you actually gain some insight into what I'm looking at the moment. So this is soybean for you. Another one I'm looking at is dollar yen. So dollar yen, right? You look at a weekly time frame and ask yourself, what is the trend? So I think this is a little tricky question to ask, because it is not so apparent at the moment, because you look from left to right, no doubt it's from trading from lower all the way higher over here. But that said, if you look at the more immediate future, you wouldn't really want to be bullish just yet. Well, you can be bullish unless you're looking to hold your trades maybe over the next few years. But if you're looking to hold trades over the next few weeks, the next few months, I would say you wouldn't really be too bullish. Why is that? Because if you look at the price action on the weekly time frame, you notice that what happened? Price has broke below this key area of support. This tells you that in the shorter to medium term, the bears are clearly in control. And on top of it, you have this head and shoulders pattern, which you can see over here. The left shoulder, the head, and the right shoulder. And this is the neckline. Price has broke below the neckline. On top of it, if you talk about, the simple basic structure of the market, higher highs, lower highs, etc., you can clearly see that there is lower highs and lower lows in the market, right? Lower highs, lower highs, lower highs, lower highs, lower lows, lower lows, lower lows. So when you see that this recent strength in the market, or say recent weakness in the market is favoring towards the downside, then chances are is that on the lower time frame, like the daily or the 4-hour time frame, you want to stay short this market. So you really need to understand what time frame you're trading on, right? As I mentioned earlier, if you're someone who is willing to invest in this currency for the next few years, then this would be a sign for you to get long. But if you are someone who is trading on the shorter time frame, you're a trader, you're looking to trade off the, maybe the 4-hour or the daily time frames, then no, you wouldn't be looking to get long. So it's very important to understand what are the moves in the market you're trying to capture. Is it really long term, like in terms of years, or in the matters of weeks, or even of the next few days? Okay, so for me, I'm looking to capture the trend on the daily and the 4-hour. So in this instance, I'll be looking to stay short on this market. So looking at the daily time frame, it becomes much more apparent right now. You clearly have lower highs, lower highs, lower highs, lower highs. So needless to say, on the daily time frame, I'm looking to short this market. So where will I look to short this market? So the next question is, where is an area that I want to trade from? And it is very obvious in this chart that this area of resistance is an area that I'll look to get short. So if price were to come into this area, right, gives you a pin bar, something like this, it gives you an engulfing pattern, or maybe it just does a false breakout where it trades higher and then closes below, this would be a signal for me to get short this market. So I'm not really looking for any specific candlestick formation like the pin bar and engulfing, because sometimes price may show you price rejection in other forms. And this is really, you have to train and learn how to read this kind of price action. They have the same meaning as pin bar and engulfing patterns, but in terms of chart patterns, they appear something different. So you really have to, start looking at the chart, start reading, and ask yourself, what is the market telling you? Is it showing you sign of strength, showing you rejection, showing you sign of weakness? This is something, you have to understand. And this is the first setup that I'm looking for. And what if you're thinking, right, okay, Rainer, what if price doesn't come into this area of resistance? Will you still look to get short? Well, if that's a good question, right? If that does not happen, then let me share with you what I'm looking for. If price, let's say it fails to retest this area of resistance over here. Alternatively, what I look for is price to trade lower, then attempt another rally higher, then you trade lower, and at this point in time, you have like lower highs, lower highs, lower highs. What's it telling you? A sign of weakness, right? And then in this instance, I'll be looking to trade the breakout towards the downside. So at this point in time, you have something looking like a descending triangle. So this will be another alternative scenario for me to trade the dollar yen. So I have basically these two scenarios in mind to trade the dollar yen towards the short side. And in case some of you are really wondering, okay, Rainer, what if price, trade and close higher above resistance? Will you look to get long? The answer is no, I will not look to get long because after all, I'm against the dominant trend. But if you're a trader who trades off the 1 hour or 15 minutes time frame, then hey, that may be possible for you, to get long. So it really depends on what kind of trends, what kind of time frame you're looking at before you base your trading decision and trading the trend along with that time frame you're looking at. So this is my take on the dollar yen. And last but not least, let me share with you another market, a market which is closer to home for our fellow Singaporeans. So weekly time frame, you can see that this is the dollar sing. Again, dollar sing, it is starting to show a sign of crack, right? Because you have this higher high, higher high, higher high, and over here is the first lower high. Sorry, the lower low, right? Higher low, higher low, higher low, and you have this first lower low over here, and you have this lower high over here. So it's starting to show a little bit sign of crack. And if you look at the daily time frame, right, price is clearly favoring towards the downside, right? It broke this key area of support over here. You can see this area of support, price tested here, rallied higher, came back, almost testing before it did another feeble rally, then it came down lower, forming this flag pattern before it broke lower. So with that said, I'm looking to short the dollar against the Sing. So this is a little interesting because a lot of traders will look at this chart and they know, right? Rainer, right? This is a previous support turn resistance, and over here is another one, right? Another previous support turn resistance. And they are thinking, right, Rainer, which level should I trade from? Should I go short at this level? Should I go short at this level? What should I do? Right? So there's really no right or wrong down here, but let me explain to you my thought process on what I choose to do. The key thing down here is that we both can agree that we have no idea where price would terminate at. Would it terminate at this area, this level, or this level? I have no idea, right? I mean, if you can predict, then good for you, because honestly, I have absolutely no idea. Maybe price may just come to the middle of this zone and then it trades lower. That is possible as well. So what instead, right? Instead of trying to predict, right? For me, very simple. Instead of trying to predict whether price will terminate here or whether it will terminate here, what I'll do is I'll just let price tell me. As simple as that, right? Just let price tell you what you're supposed to do, right? So for this instance, what I'm trying to say is that if price were to come in this area and say on Monday or Tuesday it starts to close lower aggressively like this, then it's telling you that this level seems to be holding and you can go short down here. But if let's say on Monday and Tuesday the market open and it still continue inching higher, then it's telling you it's not ready to turn down lower. So just be patient, let price tell you what he wants to do, right? Of course, a signal that you can look for is how aggressively price close lower towards the downside, right? If he forms a very aggressive candle like this, it's telling you that clearly the bears are regaining control, and it will be a good time to go short the market when you see this kind of candlestick formation. So bottom line is let price tell you what to do. Don't have to guess, right? Price is king, and just watch what happens. So a lot of it really boils down to how you read the price action of the markets. Okay, so yep, overrun a little bit today, talked quite a bit because I think last week we didn't cover any weekly market analysis, so I really have to let go everything in today's video. So that's it. If you have any questions, any feedback, don't hesitate to let me know in the comment section below. With that, I wish you good luck and good trading. Talk to you soon.